What's going on, everybody? Good evening. Welcome in, Johnny. Good to see you again. Pretty sure this is your fourth week in a row, or maybe not, but fourth class in a row. Thanks for coming back every time. I see we got Husky in here as well. Good to see you. Welcome in, everybody. We're going to get this one going in just a couple of minutes. Just going to give everybody the chance to hop on in before we get started. Welcome in, Ramos. How's everybody doing today? Interesting day in markets, that's for sure. No way around that. Overall positive reaction to the Fed. Haven't really had much of a chance myself to read into the notes at all, see what happened. But overall, good look. Yeah, nice. Definitely a nice break higher, reclaiming the moving averages here, all positive. Little bit of a break over the short-term trend as well. So yeah, nothing to really complain about there. Similar idea for the Qs, still stuff below the moving averages, but not looking too bad, especially after that visit of yesterday's trend. Like right on the money. What's going on, Dolly? Welcome in. Think definitely some positive reactions to semi earnings helped us move up a bit. AMD had a decent report last night. NVIDIA reacted real strongly. I think they had some news of their own as well. Microsoft ended up pretty much being a non-event, which I found interesting and mostly flat on the day. Yeah, not exactly what I would have expected out of that, but all good. Any questions, comments before we get going? All right, a couple minutes after the hour, so I'm going to send one more message, letting everybody know we're getting going here. Can you explain the high volume on NVIDIA QT beginning and end of day? What is, I don't understand exactly what you mean when you say QT, but what I can say is that, like we mentioned in, I believe the first lecture, yeah, good point. Q and T right next to each other. Didn't notice that. Thanks, SK. Yeah, so like we mentioned in one of the first lectures, I believe, volume follows patterns, right? So very commonly, you're going to see that high volume in most names at the beginning and end of every day. So by default, you should expect to see that sort of movement. Now, if we take a look at today in specific and even zoom out a little bit over, I don't know, maybe the past 10 days, we'll see if this was uniquely high or low. So yeah, it looks like today at open definitely was uniquely high volume. This is the highest volume bar in the last 10 days. The close volume was pretty much on par with other closes. So if you look at the close here, it's about the same. Looking at the close here, about the same. Close here, about the same. So I think really the open volume is more significant than typical for a market open on NVIDIA. A couple reasons could be driving that. Like I said, I think there was a piece of news that came out overnight that stated that NVIDIA was going to be placing a large order for TSM. So I think that represented about 60% of TSM's manufacturing capacity for the entire next fiscal year, which obviously is pretty significant. So I think that's probably part of it. And then also AMD reported earnings last night as well. So you may or may not be familiar, generally speaking, when names in a similar sector report earnings, it's common to see that kind of what's called a sympathy play, where names in the similar sector will move based on a significant name reporting earnings in that sector. So, for example, you have AMD reporting in that semis group. and we got a reasonable reaction out of AM or NVIDIA, MRVL, right? Marvell, Micron, MU, even Dell, a little bit of a reaction today. SMH, the sector as a whole, Intel, a little bit of a reaction, a little bit more muted because they have their earnings of their own coming up into today. But that's the general explanation. Does that make sense and answer your question, Jay? Cool. All right. So as we mentioned at the beginning of the class, this is going to be the fourth lecture in the volume price analysis course series. So let's get right into it. I'm assuming a lot of you have been here throughout the last three classes at this point, so I'm going to keep this kind of brief. Just let me know if you're confused on anything. But as we've kind of talked about, the way these classes are structured, generally speaking, we start with information that is simpler and kind of increase the difficulty as we move throughout the class. At this point, we're kind of at the harder point of the class as a whole, so you probably won't notice that sort of gradient. Any comments, questions as they come up, go ahead and put them in the chat. If I miss it, go ahead and put it in there again, and hopefully I'll get to it. If you are looking to catch up on the last three lectures, they've all been recorded. And I think Raphael, if he's in here, has been preparing a playlist of all those, which he's been keeping up to date. He's not in here tonight, but he's been keeping a playlist of all the lectures. So if you haven't seen the prior three lectures, you'll definitely want to watch those after watching this class if you haven't seen them yet, because pretty much everything we talk about is going to be reasonably related to the concepts from those prior classes. And I'll be depending on the knowledge from those in this class as well. So moving on, as I've been starting out the rest of these classes before, I can't really do these classes without acknowledging that a good amount of the information is from this book, A Complete Guide to Volume Price Analysis by Anna Cooling. As I've been mentioning, there's kind of no benefit for me really to shout this out other than letting you guys know that if you're interested about these concepts in a different level or different kind of, you want to see these presented in a different way or maybe a little bit more detail on one thing or another, definitely go check this book out. I think it's like $20, pretty cheap on Amazon. So yeah, here's where we're at in the course series. Again, we've gone through classes 1 and 2 and 3. Now we're on class 4 tonight, talking about advanced volume price analysis. Looking forward for the final 2 weeks. Next week, we'll be talking a little bit more about trading strategy. So kind of putting all the concepts together in a way where you can effectively kind of copy and paste the line of thinking and start applying that to trades of your own and really getting kind of those sound trade plans based on the volume price analysis way of thinking. And then finally, last class is going to be mainly an open discussion around volume price analysis. So like I talked about in the last class, kind of my vision for that class is to really have a discussion with you all, again, like open discussion, talking about how you guys have been applying the lessons from this class, questions that you've had. Yeah, really just an open discussion to kind of wrap the class up. And just a reminder of the goals. Goal number 1 is to develop successful traders who have a clear understanding of the fundamental principles of VPA. And the second goal is to teach attendees how to apply the technique of VPA to help traders create an excellent trading system. I think at this point in the class, we definitely have satisfied goal number 1. We've definitely really kind of laid out the fundamentals of VPA. So you should be feeling pretty good about goal number 1. And as we continue throughout the next 3 lectures, you should start to feel better and better about goal number 2. Even in last class, we had some really good examples about applying that these concepts to a trade plan, which we could even see right now. I know a lot of people found value in the ES example that we had kind of just randomly overnight. So let's just see if there's anything of note here. Again, this is the 1-minute chart. Those of you who were in the class last time kind of remember how we did this. Really just paying attention to kind of these high volume bars here. So here we have kind of definitely looking like sellers are in control in the short term here. Again, 1-minute chart, so not anything too important, but looks like we just got a pretty nice breakdown on volume. So if I was to trade this, it would definitely be something to watch out for. Ideally be short below this bar in specific, potentially use this little gap as a stop. So as long as we hold below this level here, this would be a reasonable place to continue to be short. Looks like sellers are in control. Trend is clearly down. Again, 1-minute chart. This is really just a simple application of these concepts. We can look to see kind of how this plays out as we continue to check in throughout the lecture. But yeah, right now, this is probably the place to define your risk as a trader looking short. So not going to go too far into that. We'll kind of just check back in and see how this example played out. All right. So starting with a recap, excuse me. a recap of what we covered in the last class. The first concept that we covered is the idea of testing the market. And this is one that we talked about a lot in detail. The short story is this is something that we really want to be looking to pay attention to on things like breakouts or tests of resistance or support. So in this specific example, you could see that trend or price was moving higher pretty steadily with decently positive volume patterns. So you can see as the spread of bars are larger, the volume that we see below is also increasing, which is a positive sign. However, once we get to this arbitrary level of resistance, which we're defining to be right around this area where these two bars pivot off of, we see this large amount of selling volume step up, which is not necessarily a good sign if bullish. So when we see these sorts of volume price analysis patterns, or I guess in this case, volume patterns, whereas price is moving higher, we come into a level of resistance, all of a sudden we see this large amount of selling volume step in. That is not necessarily a positive sign if you're looking to get long, and definitely a reason to kind of take a step back, be a little bit patient for a potential pullback before diving right in. Whereas this specific example, same exact scenario, right? Moving higher on reasonably positive volume, right? As the spreads of these bars increase in size, volume also remains above average, which is a positive sign. However, once we get to that same arbitrary resistance level, you'll notice that the amount of sellers that are in the marketplace here are much lower, which is going to be an example of a kind of positive sign, right? You have to remember back to, I believe, the first class where we talked about kind of that ongoing battle between buyers and sellers, where it's effectively a permanent tug of war where each side is fighting for control. And if we're using volume and price in order to make a determination of who's in control, in this specific example, it's pretty obvious that once we come up to this resistance level here, sellers are very clearly in control of the marketplace at this point in time, right? There's very high volume at this point, very far above average, as we come in to test this previous level of resistance, which is an indication that typically price is going to move a little bit lower before we see any continuation higher. This example, which is effectively the exact opposite, is the exact same scenario, except in this case, we have a lot less sellers in the marketplace, indicating that buyers are still very much in control. And as we know, if we can identify who is in control of the trend or who is gaining control of the trend, we automatically have a higher probability of being correct on any given trade. So really important skill to master. This is really kind of the fundamentals of understanding the relationship between volume and price in a trend, a skill that you'll definitely use a lot as you continue to use VPA throughout your technical analysis journey. So wanted to just highlight that. Not going to go too much in detail as we covered it in a lot more detail in the prior class. The other example that I wanted to highlight was this one that we covered on Dell, which reflects a similar kind of application of this concept, except just a bit more detail here. You could see this first bar here, very widespread bar, right? Massive candle, pretty much the largest one in this entire period, coming off right at this $150 level of resistance. And you'll notice, corresponding to this level, we also have a really high amount of selling volume. And you'll notice continued tests of this same $150 area correspond with lower and lower amounts of selling volume. So what we're really seeing in this specific example is a transition from this graphic on the left to this graphic on the right. So as buyers continue to test this $150 level of resistance, the amount of sellers in the marketplace is decreasing, which is a positive sign, right? It's showing that buyers are able to continually overwhelm sellers at this level more and more and more until we ultimately break above that level and come back for a retest. So really, again, what this example is reflecting is a combination of the concepts that we discussed in the prior slide. And again, right, you'll notice as we continue to test this $150 level, the amount of sellers in the marketplace continues to decrease, which is a great sign, right? If we're looking to be long, right, if we're looking for the price of a given equity to increase, we need to see sellers exit the marketplace, which is exactly what we're seeing in this given example, right? So it's pretty clear that this, excuse me, pretty clear that this $150 level is important, right? Clearly established by multiple tags of this level, and the highest volume pretty much in this given time period comes in at this $150 level. Over a couple days of testing this level, the amount of sellers in the marketplace continually decreased at this level, which is really important to note. Then ultimately we gapped, or yeah, again, right, just highlighting this is a positive sign, right? You'll notice very clearly the amount of sellers on these two tests of 150 are pretty much non-existent, right? It's right at the average, which is exactly what we want to see. Finally, once we break above this level, we come back down, get a nice retest of it. Again, not a significant amount of selling volume, which is great to see, right? We don't want to see a lot of sellers above this level, which we did on this first bar, but be mindful, again, this also incorporates a $10 gap. So while the volume bar is red, doesn't necessarily reflect the actual movement in price here. Here, again, we get a nice retest of that 150 level. And then as price moves away from that 150 level, we also get a nice increase in buy volume. So really textbook example here of volume price analysis, kind of putting all the concepts together here. Yeah, so any questions on what we covered in last class before we move on to some new concepts? Johnny's feeling good. I know Johnny's good. You were in the last module, so I'm sure you feel fine. Any other questions or comments before we continue? Cool. Of course, Husky's feeling good. All right. Moving on then to start getting into some more advanced applications. So these ones are going to be a little bit tangential to the concepts that we've been covering previously. And what I mean by that is that they don't necessarily directly build on what we've been talking about. It's effectively just more ways to visualize volume. So let's get right into it by first talking about the volume profile. I've talked about this a lot over the past couple of years and really wouldn't be doing it justice by not including it in this lecture series. So starting off, just defining what the volume profile is. Effectively, the volume profile depicts the amount of shares traded at a given price. So as we know, volume, as we typically understand it at the bottom of the chart here, represents volume by time, or another way to think of that is the volume traded within or the number of shares traded within a given period, each period being whatever time frame candlestick we're looking at. So for example, here we have a daily chart. So each one of these candlesticks represents the period of a day in the trading world, which is about 6.5 hours, I think. Yeah, something like that. And these volume bars represent the exact same. So it's the amount of volume in that given trading period. Again, the volume profile represents the amount of volume or shares traded at a given price. So it's the same idea as our typical volume, just visualized in a little bit of a different manner. And as you can see here in this note, it's definitely an excellent way to visualize supply and demand zones. Very quickly, just kind of eyeballing it here, you could definitely see how these shelves can act as support and resistance. And just to kind of pull this example up, and notice this one actually failed. Looks like we broke right back above that level. Moving on to the same example that we presented here, we pull up the volume profile, and I believe it was the 6 month that I had. And I also made this just a bit of a different color to make it more clear to see. Cool. So just drawing a couple lines here on this chart, you could probably pretty clearly tell how these shelves, right, which are these areas here that protrude a little bit more than others, seem to be some reasonably important levels. And I'll just kind of roughly draw some out. So right around there-ish, and maybe even like right around there. So these levels of support and resistance, or levels of interest on the volume profile, represent areas where shares were traded more frequently or less frequently. So you can see we have these gaps here, which these areas are called gaps where we don't have any kind of volume activity in a given area. And these areas here are called shelves, which you could hopefully see how that's reasonably intuitive. The volume shelves stick out. So it's kind of obvious that they kind of act as a shelf, right? They typically can act as an area of support and resistance, whereas the volume gaps are not sticking out there. Yeah, that's the best way I can think of explaining that. So the next slide that I have hopefully helps explain that a little bit better. So here, again, you can see an example of a volume shelf. Here you can see an example of a volume gap. And then the term that we didn't increase yet or introduce yet is the point of control. And this point of control is important because it represents the price level where shares were traded the most frequently. So you can imagine on the specific chart, the point of control lies at 5:15:32, which this represents the most important level in this given time frame. If we look at the profile over the last 3 years, you can see that the most important level on this chart is 443.98, which if we draw this level out and then maybe zoom into the daily chart, might be a bit more clear. Okay, it doesn't quite reflect all that time, but essentially the volume point of control is the most important level in a given time frame. And it represents where the highest amount of shares were traded, which you can imagine that should be pretty important, right? For whatever reason, the people with the most amount of money, as we've talked about throughout this class, right? Smart money, large institutional investors, for some reason, are the most interested at trading a given equity at this specific level. So automatically, right, this is a level that I'm always marking off as support or resistance, right? It's always going to be the most important level in a given chart, no matter what. So that's the way, kind of the basics of the volume profile. Before I get into it anymore in terms of how to use it, does this make sense at a high level? We got one question. How do you set up volume profile in TOS? Yeah, so the way I do it is pretty simple. I'll just give you a quick rundown while we're here. But pretty much what I do is change this price per row height mode to tick size instead of automatic. I change this, and that's the main change I make. Every other change I make is all personal preference. It's just how I want it to appear. I change this show value area to no, change this opacity from 20 or from 50 to 20, and then I hide these VA high and VA low plots. And then also change the color of the profile in this globals area. But again, the most important thing that I change is this tick size. So change from automatic to tick size. Everything else is really just based on your personal preference, how you want it to look. So, oh, and sorry, I forgot one thing. I also change this on expansion from yes to no. And you'll see why when you try and set it up yourself. So that's really the big idea of the volume profile. And you might be wondering, well, how does this really correspond to what we've been talking about, right? And as you guys are probably aware by now, the theme of this lecture series is all about volume price analysis. And the volume profile, or as sometimes you'll hear, it'll be referred to as the market profile or something else. It's really just another tool for us to visualize the interactions between volume and price. And I know that's pretty vague, but hopefully it's reasonably clear already how easy it is to tell. And one thing that I want to note is, generally speaking, price is able to move through gaps very quickly because these gaps represent areas where buyers and sellers are just uninterested in trading a given stock. So, for example, you can kind of see how that happened before, right? This gigantic volume gap here, you'll notice we didn't really spend much time at all trading in this area. And also, we have a price gap as well in the exact same area, which that is not by accident. Let me see if I could make that a bit more clear. Also have a price gap in the exact same area, right? So it should come to you as no surprise that it's pretty easy to start trading once we get into these volume gaps. There's not much supply and demand or interest from buyers and sellers in these areas. And at least in terms of this specific move lower we got recently, we were able to find support right here. But I promise you, if we didn't, really the next level would have been down to this next shelf right around 530. So this was really kind of a last chance level at this gap level. Below that, it would have been a pretty quick move down to 530, considering there's really not much demand from buyers in this area. And the same thing goes for this gap, right? You could see the last time we were here, we moved through this gap in 1 day, right? Which makes sense. Right? You'd never traded this level before. And if we take a look at the shelf on the weekly, you could kind of see the same idea, right? So, for example, this area in specific, this large shelf here, you'll notice how typically when we come into this level, there's a bit of a battle, right? So here, when we come into the shelf, you'll notice definitely a good amount of buyers and sellers fighting in this area. Here, you could see same idea, right? I could just highlight a couple. So these volume shelves represent areas of strong resistance or support. And when price comes down to test these areas of volume shelves, typically speaking, that's going to be a really, really strong area of support. So for example, if you see price come down into a shelf like this, or even in this case, right here on elevated volume, right, it's definitely a sign for you to consider start looking long, right? And in this case, we kind of undercut the shelf a bit, so not the perfect example, but that's really the idea behind the volume profile. Obviously, with anything, there's only so much you could cover in a quick 15-minute blurb about the volume profile, but at a high level, does it make sense how this can be valuable? I'll go through a couple just kind of real world examples talking through it. But outside of that, that's pretty much the big idea. We'll see if one of those names could be a good example, Norman. How about AAVE Go? Yeah, it's not quite the best example. Yeah, we'll use this one. All right, so if nobody has any questions, we'll just cover this first example here. This is an interesting example because earnings are involved, so a little bit of a kind of grain and salt to be offered here. However, you'll notice, right, this area is effectively one gigantic volume shelf. And notice how price remained in this range for a long amount of time, right? Which generally should make sense, right? When we're in these areas of significant volume shelves, that represents an area where both buyers and sellers are interested in trading a given asset. In this case, this is AAVE Go, and for whatever reason, buyers and sellers found it important to be trading in this area. And you'll notice once we broke above that volume shelf, which the last one is really right around here. So we break above this last shelf and also this kind of final all-time high. We pretty much, I mean, in this case, this is really aggressive. Again, earnings are involved, but I mean, we moved 30% in a couple of days. And again, very aggressive example. Earnings are obviously involved in a factor here. However, it does illustrate the point reasonably well, right? This illustrates an area where buyers and sellers found it reasonable to be exchanging a lot of shares, right? This is an interesting place for them to be trading. And you could treat it as a large area of resistance, right? And once that area is cleared, for the most part, it's clear skies. And you can see kind of that exactly reflected here. And I think a similar idea actually exists on ARM, Norvin. Yeah. So same exact idea actually taking place now. Clean this up a little bit. So similar idea now, Norvin, where we're coming back into a massive shelf here. And lo and behold, after yesterday, we got a nice bounce out of this shelf. Again, right? News is involved, so we can't say it's the only reason because truthfully, it's not. However, clearly a massive area of demand, right? Is the most significant shelf in this area until price comes all the way down to 76. So this is going to be this 130 to 120 area is going to be the most important area on the chart until we move to this next shelf below. And you'll see this reflected time and time again. So I recommend just kind of throwing the volume profile on, really using it to help you identify levels of support and resistance, because that's really where it's most powerful, as it really helps you visualize the strength of a level of support or a level of resistance. That's a big idea. Does that make sense? Cool. All right. The shelf, yeah, exactly, Helmet. Yeah, so the shelf is typically an area where you should expect kind of some consolidation, right? Because it takes time to form these large shelves, right? It typically doesn't take one day of trading activity, right? It's going to be a large period of time when these volume shelves are formed. All right, the next topic I wanted to cover is pretty much just volume indicators at a high level, and I wanted to talk about the specific volume indicator that we've had on a lot of the charts we've been showing. Helme, is it only in the daily time frame? Yeah. So I don't know if you're in the beginning, the introductory lecture, Helme, but what I said is that anything we talk about in this course series is applicable to any stock on any time frame. That's the answer. Nothing's only on any time frame. As a note, anything on the higher time frames is always going to be more significant than information on the lower time frames. But for the most part, all that matters is that everything we learn here is applicable on all time frames. All right, the next thing that I wanted to talk about is just kind of showcase a couple different volume indicators just to show how they could be a tool to help. This is one that we've gotten a lot of questions about, so I wanted to cover it in this lecture. Essentially, this specific volume indicator highlights yellow, not is volume is high, if volume is high, sorry. Oops. So this will highlight the volume bars at the bottom, yellow if volume is high. And the way, this is something that I kind of wrote myself. So this is a kind of custom script here that I've posted in my tab. The big idea behind what's happening here is essentially what's going on is this script that calculates a 200 simple moving average. So this pink line here represents the 200 simple moving average of the volume given in this time frame. So if you guys are familiar with simple moving averages, essentially all it's doing is adding up the volume over the last 200 periods, then dividing it by 200, and then boom, there's your simple moving average. Then I calculated this standard deviation. So this gray line here represents 3 standard deviations above the 200 simple moving average. And really what that's meant to highlight is just outliers, right? So significantly above average volume. It's just a statistical tool to identify that. If you're familiar with standard deviations, great. If not, great, not too big of a deal. The important thing to note is that all I'm really trying to reflect in this script is when volume is very high above average, because as you should understand by now, as we've continued throughout this course, when volume's above average, we should be paying attention. So this gray line really represents kind of the threshold for that. And as you can see on the charts, if I go back here, let me just pull up a more normal study here. Where do I have that at? I don't even remember. Am I not seeing it? There we go. So, oops. Cool. So you kind of see that reflected here and what that looks like. All this is doing is really highlighting above average volume. And what that really helps me do is just really make it very clear when we're getting kind of a scenario that I should be paying attention to. So for example, right, we have this really high volume out of nowhere on this bar here with a long downside tail, bull bar closing near its high, right? Which lo and behold ended up being a significant low before a nice, I don't know, 7% move higher in price. Same idea, oops, clean this up. Same idea here on this one, where we have really high volume as price looked like it was going to continue to move lower. Actually, this ended up being stopping volume. So we got this really high volume. Price didn't end up moving lower, ended up creating this kind of base here, and then ended up breaking higher here, which is a signal to us that this is likely a bottom at this point, right? So this is a concept of stopping volume, which we didn't really introduce too much. Essentially, stopping volume is something that you'd expect to see at the top or bottom of a trend, right? And it effectively represents the last of sellers selling or the last of buyers buying. Yeah, exactly, Norvin. Yep, correct. And yeah, we could go through every example, but not super important necessarily. Really, the script is just meant to represent above average volume. And when we get that above average volume at support, typically a bullish indication, we get that above average volume at resistance, typically more of a bearish indication. We get that above average volume during a breakout. It's an indication of whatever the direction of the breakout is likely to continue. That's a big idea. That's all this volume indicator really helps with. Yeah, I wanted to highlight just a couple more options for volume indicators. Again, not really the end all be all, but yeah, just a couple more ideas, maybe things that might be useful to you in the future. Trying to find one good example to see if I have a picture of it, and if not, we'll just pull some up. Okay, not quite. That's fine. So just kind of pulling up a couple more volume indicators. I don't remember what this one is called, so let me see if I can find it. Is it this one, River Volume? Yeah, so this is a script that River likes to use. Again, also just kind of displays the current volume in a specified time period. So for example, this right now is set to show the current volume for the given day, and it splits it up by buyers and sellers. So for example, if you go to the 5 minute, you could still see the overall volume totals for the day reflected here. which obviously that can be useful, right? It helps you visualize what's going on the higher time frames while also still looking at the lower time frame chart. So again, just a tool, right? Just an example of how we can use some volume indicators. I don't even really want to call them indicators because really all they're doing is making calculations, but really just showing the capabilities of using some indicators to help us analyze volume in specific. So not necessarily something that's required. Really, the big idea of this section is just to help you understand that, hey, there's extra tools out there if you wanted to dig into those at all. Our book says, if you swing, what setting would it be smart to put this indicator to? So to be honest with you, if you're a swing trader, this is probably a little bit less relevant because for the most part, I'm assuming you're going to be more focused on the daily anyway. So yeah, the answer is, typically speaking, you want whatever this indicator is showing to probably be the higher time frame. So if I'm looking at the hourly as a swing trader, right, if I like to swing trade based on the hourly, probably would want to have this still reflect the daily volume. But yeah, it's kind of up to you. Does that answer your question? Cool. Any other questions on just kind of volume indicators in general before we move on? All right, everybody's feeling good. Good to hear. Okay, in that case, I wanted to move into a real example of kind of starting to put all of these concepts together. Um, so potentially, we could maybe start to open our minds to the idea of this being a little bit interactive. I also wanted to pull this forward because I know some of you will probably be um, in the mastermind for the next couple of weeks, so you won't be able to attend these lectures live. So what I wanted to do is just kind of work through one example, really just kind of setting up a trade plan based on volume price analysis. So yeah, let's go ahead and start that off. I didn't come to this lecture with a ticker in mind, so I'll probably just do a quick scan to kind of show you the process. Yeah, I guess I could even start all the way from scratch even if we wanted to. I'm actually going to do that. So I'm going to start by showing you all the process that I would typically follow in order to actually find something to trade. So typically what I would like to do, at least for like a weekly routine, is I start with this scanner on Binviz. And this is a really good way to just kind of determine what sector has been leading. So stronger sectors over others, weaker sectors over others, because as you guys probably know, generally speaking, we want to be after those sectors, at least me personally. In a bull market, I'm looking for strong sectors. I'm looking to get long, right? I'm not looking to be in shorts in a bull market. It's just not the way that I like to think. So very clearly, right, the strongest sector for the most part over the last couple periods is technology, right? Technology year to date is the strongest from 1 year. It's the strongest from half the year. It's pretty much the strongest. 3 months, it's the strongest. 1 month, it's actually one of the weakest. And 1 week, it's not quite there. So I'm going to do this with a little bit of a different sector to start and just focus on what's been strongest over the last week. So what I would typically do is go ahead and click on this basic materials sector. And what this scanner will show us is every single stock in this basic materials sector. And I have this preset that I follow, Sunday scan. Essentially what it does is it looks for companies with a market cap over 2 billion, price over $5, and an average volume over 500,000. And this is actually something that I learned from somebody else online, just how to use these scanners. I thought this was actually pretty cool. And we'll go back, I don't even remember what we put, I think basic materials, and we'll add this basic materials sector. And then what I go into here is sort by performance, and then just sort by what's been performing the best over the last month. And now when we go back and click on charts, we could see our top performers over the last month. Now, what I like to do is just scan for names that are in what looks like a nice tradable setup. So ideally one that's not in the process of breaking out, like something like this AVTR. And what I'm doing here is just kind of looking for decent looking volume patterns, decent looking kind of price consolidation, which to me, this AEM is kind of standing out. So let's take a look at AEM. So the reason this name stood out to me a little bit here, if we zoom out just a bit, oops, I guess this is fine. Well, let's actually get the full picture here. Okay, yeah, that makes sense. So the reason this one stands out to me a bit is today, which looks like we just reported earnings, which makes sense. Today, we got a nice move higher, barely squeaking above this prior level of resistance. We're leaving this gap behind as well, indication of strength. We also have rising volume as price moves higher, positive indication of the trend. Definitely some pretty positive volume patterns as price was moving higher previously. We got this really high volume couple of days here when price was in range, but not something to give too much weight to considering we didn't really go anywhere as a result. So this one definitely just looks overall reasonably strong, right? The trend is healthy. It's leading its sector as a whole. Volume price patterns are positive, and it's also in a reasonably tradable pattern, right? We're a little bit extended from the EMAs here. However, we're coming right into this level of resistance, right around 77. If we just take a quick step back and look at the weekly, right, a little bit larger time frame, overall, we've been definitely moving out of a nice long-term base. Zooming out a little bit further, we also recently moved above some pretty significant areas of resistance, right? So this area here looks to be pretty important. And also, as of the last couple of weeks, we even retested this area as support, right? So right around all these bodies where we were tagging that area turned into being support. We got this really last chance wick, which actually, funny enough, coincides right with the 77 level. And the next big level above that is really 85. If we take a look at the volume profile here, we'll notice that there's no real warning signs of strong resistance above. We just kind of hone in this a little bit to get rid of all this data from back here. So maybe take a look at the last 5 years. Again, no significant resistance above here. Even if we expand this to the daily just to make it a bit more clear, still no real significant resistance above until right around this 79 to 80 area. So probably would mark out this $80 level as an area of resistance. And just to kind of show you guys why I'm doing that, I'm looking at the volume profile here. It might be a little bit hard to see, and noticing a shelf right around this 80 buck area. One kind of area or reason for me to be a little bit concerned about this one is we're a bit extended from the EMAs. So this is the second move significantly away from the EMAs on the weekly. Not necessarily a sign for concern just yet, but as we get a little bit more extended from the EMAs, it can be a bit harder to trade with confidence, or at least with tight risk to reward. So we'd have to be mindful of that when we structure a trade based on this. But yeah, all in all, this looks pretty constructive, right? Again, price is moving higher. We also just got earnings out of the way, which if we look at the after hours reaction to this one, pretty much nothing happened. So that's fine, I guess. Yeah, never traded this one before. So yep, not really sure why there was no reaction, but really easy to find trade here, right? We have no real problems in this one. We don't have any significant sellers stepping in as we tag this resistance, right? So we had a lot of sellers down here. The last time we tagged this resistance level, no significant amount of sellers step in, right? So that's a positive sign. And again, today we broke this level of resistance just barely on rising volume. Next up, this is a name I've never traded before, so I'd probably take a look in TOS and just figure out what they do. Okay, so they're a gold mining company, so that's good to know. So if you're trading anything that's a gold miner, you probably need to take a look at the gold chart itself, which lo and behold, gold just broke a massive pivot today, right? So that's good to know, right? Gold is moving higher pretty nicely. So we're going to need that if we're trading gold miner. Next up, typically I take a look at the options, which I'm assuming this one's going to be pretty illiquid. Yeah, so not the best really. Yeah, not really the best best to trade here. But still, I would still go ahead and just check the flow on this one. So go ahead and take a look at flow and filter for AEM, which we don't have any trades in the short term. So I'll just start removing filters. Okay, and the last big trade was over 2 weeks ago with the 70 put. So that doesn't really give us much information. There's not really much for us to do there. We had a couple big trades early July, the 85 calls. We could see what they were thinking there. I think they were really ahead of the game. Yeah, so they were pretty ahead. No, actually, they actually bought those calls at the top, which is interesting for us to note. So they bought these calls, 85 calls on 7/16, which was here. So right at resistance. So 85 calls. We could take a look at the chart here, see how they've been trading since that time, which just doesn't show us anything. We got to look back to the 14-day chart. So they bought all these 85 calls for, oh, wow, these are leaps. So they bought these for $7.70. They're about the same price now. We could see where they closed. Yeah, so the last time they traded, they're about the same price. So we can see that this seems to be an interesting contract, right? The 2025 expiration. And we could even drop this premium filter down and really kind of see. So it looks like as of late, people were trading these with nothing of significance. $5 here, $25. That's nothing for us to pay attention to. So the short answer is this is kind of the workflow, right? So what we did is we essentially used, which we didn't really cover that in the VPA course series here, but we looked for relative strength in a strong sector, right? Basic materials is one of the strongest sectors. So we looked for relative strength there. We found a name with a constructive setup within that sector, and then we applied our volume price analysis techniques in order to formulate a reasonable trade plan, which for now, I would say long above this $77 area, targeting this $80 area, right? Pretty simple. Moving probably, or before I move on to another example, I want to trade something, or I want to look into a tech stock that's going to be probably a little bit more applicable. But did that kind of make sense as a whole? And I know I kind of blew through that really quick, but that's really the workflow there. Johnny feels good. Cool. I'll get you another example, Johnny. Don't worry. All right. Let's take a look at an example from the tech sector. So again, you could just filter by clicking on tech here and go ahead and apply that preset. Filter again by tech. And we could start to sort by performance. So just sort by the last month's performance, and then go into the charts and start to see what's looking constructed. So we can see Run, that's a solar stock, not super interested there. Couple other ones, just trying to quickly scan. This one looks interesting, FFIV. That looks pretty interesting. Software stock looks like they just had really good earnings. Well, here we go. Norvin MSTR shows up on the scanner. Okay, not seeing anything I love too much yet. Okay, so I might go back and filter by the performance, over the last week. So see what's been doing really well this week. Okay, so let's see if we have anything looking good. So this is a software stock. So to me, it looks like a lot of software names really been leading, which makes sense. That's something generally familiar with. Okay, yeah, ServiceNow. So this is one I actually recently became aware of. So this is an interesting one in the tech sector. Taking a look at this, yeah, so you can see I already have kind of got my sights on this one. Clean this up a bit. So this is a little bit more of an established company than whatever we were just looking at, AST or whatever. ServiceNow, if we take a look at this, recently just broke over the all-time highs. And you can see when it broke over the all-time highs, it broke above on really nice, far above average volume with a massive spread bar, right? So going back to our volume price analysis, that's definitely something that we want to see. And now on the pullback here, we've seen just dropping volume, right? So nothing of concern there. That's pretty reasonable, right? Volume drops off as price moves lower. And we're still just trading right at this previous all-time high level here. A little bit extended from moving averages, but not something to be concerned of just yet. Trend is fully positive. Looks like volume patterns are decent for the most part. not anything to be too concerned of. We got this really big move lower, which actually was quickly bought up after all that volume. So that's actually a good sign. Taking a look, if we didn't know what this company does, we could look into, the analyze tab, make sure we understand what this company's doing. If we do know, we could start to look into the options chain, figure out what's liquid, what's not. Yeah, Cirrus now, super popular for sure. Taking a look at the options chain here. Again, unfortunately, another kind of a liquid set of option contracts here. So probably would be one that's a bit more favorable on the share side, unless we see anything that really stands out to us. I'll take a look here. Yeah, so kind of illiquid on the option side. So probably would be more of a share name, which again, kind of part of the consequence, right? Sometimes when you're looking through this large scanner, you don't necessarily always get what you're looking for. But if we filtered for now, and then just sorted the premium to be greater than 50,000, just to make sure we're hiding all the BS. Looks like a little bit of interest here. Yeah, so the options are just not really the way for us to go, I don't think, on this one. So probably would be more of a share trade. So I'll see if I can find something that's a bit of it more of a, I'll say, larger cap name. So we can just sort by mid caps only, then go back to performance, sort by week. Actually, I'll even sort by, or wait, that's not what I thought it was. We'll sort by mega caps and go back to technology. And here we could just quickly analyze all of our mega cap names, see if there's any kind of good looking setups here. ASML looks pretty interesting there to me. AAVE as well. I'm assuming a lot of these names have pretty decent looking volume patterns after today. CRM, not very interesting. Yeah, let's see. Qualcomm, decent look to it there. Microsoft, we talked about that one, also pretty interesting. We could also search by communication services, which should include, yes, our Meta, Google, and not quite anything too interesting there. Meta looks a little bit interesting. T-Mobile, that's not really one that I'd commonly trade. So going back to just mega cap tech here, ASML is really, I'd say, the most interesting one to me here. So let's just take a look at ASML. And again, this is just a really quick scan here, ASML. So taking a look here, right, we got a really nice move back into the 200 moving average over the last couple of days. Overall trend is still kind of negative, right? EMAs are still trending positively. However, on this gap higher, big move higher, this is the highest volume that we've seen. Also, overall, we've been seeing really high above average volume, which is something that we want to see at a nice significant low, right? We want to see that large amount of volume taking place and kind of showing up there. In order to define a trade on this one, probably really need to hone in on the hourly chart a little bit better and kind of figure out what's going on here. So let's do that real quick. So from an hourly perspective, let's simplify this a bit as well. Hourly perspective, a little bit easier to define. We could maybe even take a look at the volume profile on this time frame. Yeah, so this is a nice way to look at this and kind of visualize this a bit better. So if we were taking a look at the volume profile, this is going to be pretty much the most important level here, bring this right above that shelf. The hard part is your stop really would have to be below today's lows if getting long there. So kind of difficult to justify that. However, the most logical places to trim really are up into these pivots here before the larger gap fill. Just kind of highlighting that here. And then shifting back to the daily, we could also take a look at the volume profile here, which also reflects a large shelf right in this area and still a large shelf above, but a smaller gap. So I guess I'll just kind of zoom in on this so you can see it a bit more clearly. We still have this large shelf here, and which is within a larger shelf in general. However, we have this gap between two large shelves here, which represents the distance between this level to this level. So still probably a reasonable trade in there. So going back to the hourly, again, right, from a volume price analysis perspective, we have rising volume as price makes this large gap after forming this base. So positive sign there. Moving back to, we could even start on the 4 hour here and see if there's anything more reasonable for us to do. A couple ways to probably trade this one. You could either trade over this hourly shelf, which looking at the 4 hour actually looks like really the better level here is actually close to these two highs, which makes sense. So if trading this one, probably makes sense to get long. above the 930 or 943 area. If we wanted to find maybe a bit tighter of a stop, we could probably take a stop below 930, which still is a little bit loose, but gives us a bit better risk to reward there, or a failed breakout above this 943. So hard to kind of run through these trade plans really, really quick, especially when we're doing it on the fly, but that's kind of the mindset, right? So this is really starting to wrap all the concepts together where we're finding positive price action, right? So we're finding standout names and standout sectors, which is what we're doing with the tech names and even those basic materials. Then using volume price analysis to determine what kind of or who's in control of the trend right now or who's has the highest potential to take control of the trend. And then from there, using either the volume profile or just kind of general other methodologies to determine key levels. And we didn't really get into too much detail about structuring the trade. We'll focus on that a bit more in the next lecture. But that's really the big idea. I know we flew through that really quick. We'll have a much more detailed lecture on this next week. So if you feel like there's more detail to be had, don't worry. Absolutely, we will be covering this in more detail. I really just wanted to kind of pull it forward a little bit, start to talk about it before next week. Any questions, comments, concerns? Thanks, Norman. All right. Cool. Well, in that case, I believe that's most of the end of what I had for this class. Yeah, so we talked about the real world examples, summary. Yeah, in terms of summarizing what we covered, again, covered the concepts from the previous class, started to dig into some real world examples and introduce some other kind of different ways to think about volume. As a reminder, next class we'll pretty much only talk about examples. So pretty much no PowerPoint. It's going to be all just covering examples. Talk about how to really start applying these concepts of volume price analysis to trade ideas. Yeah, that's a big idea. Cool. All right, everybody. Thanks so much for your time. Much appreciated. And we will see you guys all in the next class. Adios, everybody. Thanks for coming.